I hope you're all having a wonderful day today. Let's go ahead and make sure you all can hear me. If you would go ahead in the questions box and type the number 1 to let me know that you can hear me, I would be very much appreciative of it. Fantastic. How you doing, Brenda? Good day, Joseph. How are you too, sir? Hope everything is well. Thank you, Wayne. I appreciate that comment. Gary, how you doing? Fantastic. Excellent, excellent, excellent. Very good, folks. All right, so let's go ahead and jump into some of the stuff for today. Guys, this is just an update of where I'm at, what's going on. Those of you, in case you didn't catch that are in the Market Insights, you did not catch the video over the weekend, the upcoming Traders Chat is April 6th, which is Wednesday of this week, 8 to 10 p.m. If you are in the Market Insights, you will be registered for that probably today, possibly tomorrow, automatically. You'll get an email confirmation of it and then a reminder to let you know it's coming up. This is where we get together once every month, month and a half or so, and just gives you a chance to ask questions related to what we do in the Market Insights. Next month's the Market Movers, and I'm home for another almost week until April 11th and 12th. I'll be in Baltimore and then Cleveland and Indy. I do not have a May schedule yet. We're working on that. Obviously, TSS, the Success Symposium, is the main focal point for May for us. I'm just waiting on the rest of the schedule. 2-day Traders Camp. Yep, it's different. It's moved. It's in Baltimore is the next one we're doing. And then tonight we do Trader Talk. And here we are, Power Hour, each and every Monday. All right, guys, here is the Follow Us page that I put up for BetterTrades, YouTube, website, Facebook, and such. By all means, go ahead and check it out. And then let's go through the disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. You know what? It's just against the law. The SEC, which the Securities and Exchange Commission, they required me to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate indicator, set up something, anything you like here today, my suggestion, just paper trade it first. Paper trade the daylights out of it before ever putting 1 penny of real money into the trade setup or indicator, and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So we got a couple of comments and or questions in here. Patty says, good for you getting to stay home a few days. Yes, the days are rushing by quickly though, Patty. I will say that. Getting as much done as possible. But I thought I'd have a lot accomplished this week. I thought I'd be down on my boat already this week, but not with this 30s and 40-degree weather we're having. That's going to have to push out. Charles said, hope to get this class in at work. Looking forward to Trader Talk tonight. Excellent. Good, Charles. Yeah, that's great that you're able to do that. Diane said, when do you normally trade during the day? Various times, Diane, but for the most part, I trade the pre-market around 7 a.m. until about 9:30, 10:30, 11, depends on what's going on in my life that day. But right around that range, and I get back into it usually in the afternoons. Mondays are a little tougher day for me to do the second wave because of additional obligations I have to BetterTrades as the Chief Marketing Officer. I have some other things that I have to attend to. So other than that, I mean, for the most part, 7 a.m. until 11 a.m., right about in there, Diane, is where you would normally see me trading, and then coming back at 2 to 4-ish. I do everything I can to leave my office, leave the house whenever possible in those hours. And it's not as if there's not plenty of stuff to do. Ask my wife. She's got a ton of stuff for me to do. Every day there's a list that we deal with, right? Excellent. Okay. You are quite welcome, Diane. All right, so let me take that down, guys. And Debbie had typed in a question there. I have a charting question. It's on the ES about 7 a.m. Would have gotten in as it retraced and broke down. Would stay in where? That is my question. Would you have gotten out and closed above the 10 EMA about 9 a.m. Central Time and get in at 9? All right, so let's back up, Debbie. For me, let me first go over to ES, and let's go look. Debbie, I'm going to assume you're looking at a 5-minute chart, and you were talking about Central, so let me just back out. About 7, so I'm guessing that would have been 8 real world time Eastern, so right there. So you're looking at the moving average cross, right? So I saw a second part of your question though, so let's go see. I want to look at what's happened first from the over the weekend. Yes, you can trade, and Diane, in case you were unaware of this, you can actually trade this vehicle that Debbie brought up that she questioned. You can trade this on Sunday night after 6 p.m. Eastern. This was the close, right in here, and then we open back up 6 o'clock, and you could see it's traded all through Sunday night, early Monday morning, and then till now that we're at. So 7 a.m. would have gotten in if it retraced and broke down. So Debbie, right, so there's the question, there's the first question, right, is the entry. The moving average cross took place here, the breakdown was here. The question is, would you have taken it there on that breakdown? That's number one. My opinion is you wait for a retrace, but that's because that's the style of trader I am. If someone is the style of trader of a little more aggressive and you take a breakout, then great, you don't need to wait for the retrace. So, but we did get it fairly quickly, Debbie, and the pullback to right here. What I see that would have possibly concerned me, because I was not looking at ES at 7 o'clock this morning, but what I see that possibly would have concerned me right along in here is just that series of bottoms. And actually, let's do it this way. The only bad thing about trying to draw it with that line is you just never, I'm just going to draw it here. You never know if you're perfectly straight or not. And I don't want to use a horizontal line because it just snaps all the way across the chart, and I'm not looking for that. Okay, so these bottoms right there, Debbie, would have been the concern. So the question is, on the retest, do you wait for the break below that lowest, whatever that lowest wick is, would have been the entry, 1 tick below, so 1/4 of a point, Debbie, would have been the entry for me right there. Let's see. Let's see. Okay, so that's where I got in. Right, Debbie, so I was looking at YM. So we got the break to the downside. That's the entry. You got the retrace back up, you come back down, the retrace back up, you come back down. And then, Debbie, depending on what your stop is, were you watching it, or did you have a hard stop in, or what was your trailing stop? What was your stop at this point? You were just watching it. Okay. So if we're looking at ES, and let me grab a calculator real quick. Just give me a sec. So if we moved, well, let's put it over there for now, all right? So if the breakout was here, oh, Debbie, my apologies. I'm looking at YM, not ES. Why is this? I swore I clicked on, I clicked on ES, but for some reason I must have pulled it over to, let me just change it, ES space M6. All right, so let's just do that again. So 7 a.m., which is 8, right there. So I thought it looked real familiar, right? I'm looking at it saying, boy, this looked just like the YM this morning. All right, so as we broke, the congestion I'd be referencing would be right back in this point. Let's see. Let's try that one more time. Right about there. So there's the break, there's the comeback, there's the retest, and that candle is the entry right there after the retest, right? Well, this ran, if the entry was at 2068, we came down as far as 2061. So let's see, 2068 to 2061. just grab a pad, get a notepad. So we had a 7-point move, so 28 ticks. So Debbie, if you had a 5 or an 8 tick stop on it, or let me rephrase that, but you know, you let it go, would have let it go from 2061 all the way back up to 2066, so 5-point moves, 20 ticks would have been the give back on there. If I were on a trailing stop, I probably would have been, you know, 5 or 8 or 10 ticks of a stop, depending we're already at market time. Yeah, so I would have been more like a 10 or a 12 tick stop here on ES. So I would have been stopped out, even if I was 12 ticks, 61, that would be 3 points, so 63. I may have been stopped out, Debbie, on the way up. Now, your question was, with the break above, would you have stayed in? Would I have stayed in? I don't normally allow it to go that much back unless I have only one contract left or a very small portion of my contracts. Let's see if I have a 55 on here. I do not. Okay. So let me go ahead and insert. And Debbie, I know you use slightly different levels than I do, but I'm going to use a 55 moving average. Let's go back in and edit the chart now, because my standard comes up. Oh, there we go. It came up as 8. So let's change this to 55. Let's change it to a brown-ish type line. Okay. All right, so Debbie, I would have used the 55. It would have been exponential. If you're following what Marquet does, you may have used a 50, which would have put you just slightly closer than mine. So if I were looking for that, then yes, that may have been the reason to stay in. But the overall move was, you know, very nicely bearish. But you've got to also look at where we came down to. We settled in right in here, right off of these bottoms is where we came in, hit that double bottom and took off. So would I have stayed into it? For me, probably not. This right here was too much of a violation from the lows that it had been at. But it's just on the ES, way too many ticks. I mean, we had, if that was, what did we say that was, 6 points? So 61 up to 66. So 5 points, 20 ticks. So let's bring that in. Let's go and look at a 20-tick move. And guys, if you're typing stuff in, I'm not seeing it yet. So one contract, 20 ticks. That's $250 give back per contract. So it's a little bit more than the risk I like to take. But if you were watching it, Debbie, so I would have had mine set as a hard exit. If you were watching it, I would not be opposed to it if you're using the 55 and maybe had scaled out of some of the trade here for the technical reason that in the overnight session in the pre-market for Europe is where we bottomed out before it became our catalyst, because this could have been the complete turnaround on the market and the move higher right off of that level there earlier. Yeah, we'll look at Costco, Joseph, no worries. I'm just wanting to make sure, Debbie had a couple of the comments in there. I just want to make sure I got them all. No, Diane, I don't use rectangles on 5-minute charts only. I will use them on any chart. Right now, I'm not really using it as a rectangle. I'm using it because normally I would just draw a line here with a horizontal line and try to diagonal line and try to make it look horizontal. Instead of doing that, I just grabbed a rectangle and stretched it out a little bit so the box was a little bit profound, or defined rather, and I was able to very quickly come up with a support level in there. So Debbie said, so I'll answer the second question. Debbie, you answer this one for me while I'm doing that. Does that make sense where I'm going with what I just said, Debbie? And then your question was, would you have gotten back in where it broke down again? Your next question. Okay, so the first part was good. That made sense. And then right in here, would I have gotten back in it's iffy now, Debbie, right? Yes, depending on the move. See, if I took this entry here, I would not be as concerned getting in here at somewhere when it failed, right? The bigger problem would have been had I not taken the first entry here, which has the biggest potential for the move, and I come back in and try to take the second one. Look at the sloppiness that took place in there. You know, if I'm in my first trade there, I'm in a different mindset. It's easier to get whipsawed. I'm pinching pennies a lot more than if I got in here and I've got a couple of points locked in. You know, if we went and took that entry from 67 and you get back out at 64, you know, you've got 16 ticks, and at this time in the morning, I would be trading 4 contracts with 16 ticks. That's an $800 profit in my pocket if I locked in that trade because I was stopped out. Well, now if I'm wrong here and I give $200 or $300 back, I'm not as concerned with it. Not as concerned with it at all. All right? Perfect. Scott says market open chaos. Yes, you're absolutely right, Scott. Right here, let's highlight the market open, the official market open, right, of the equities markets. Right here, we're already down, and then we got into that whip in there, and it just became a very aggressive move. If we go back, guys, and we look at this, let's see. If we look at this candle, 1045, right? Actually, let's not even look at that one. Let's look. One, two, three, four, five. That forms a candle. Okay. Don't know what happened. It looks like I lost connection there for a second. So let me go say it again. So we're looking at the 950 candle, which was right there. And then that's 1, 2, 3, 4, 5. Look at the movement that took place on these 5 candles. Right in here. Whoops, let's see. So the first big red one, and then the next red, 3 green. That's what I'm referencing is those 5 candles. That was a complete whipsaw at that point. You look here and you got the same thing. We move down here 36. So 35, 6, 7, 8, 9. That puts it to 40. I mean, you could see the big movements in there. And guys, those of you that are using volume delta, let's see. I got to go open it from somewhere else. But those of you that are using volume delta on your charts, right, this would be a great place to analyze volume delta on these whipsaws in the morning and watch how there may be such lower volume. Look at this candle here, right? You got really nice big volume. This candle before was decent. The one before that, big mover, but there's almost no volume. You can apply the volume delta here to determine was this really a strong bullish move or not. This could have been a complete head fake. So Debbie, if we go back and look from that 5-minute candle again, this thing's looking like a tic-tac-toe board. If we go back in and look at all of this right here, Debbie, measuring that on, yeah, you're right, Scott, yeah. Measuring that on by using volume delta may help to distinguish, is this a viable trade or not? So let me see if I can grab it real quick here. Just give me a second. All right, so let me open it. I got to open it from a different page. I had not used it in a little bit on this computer. You can see how long it's been. Well, I'm going to have to do it with YM, though. That's the only bad thing. YM space M6. Oh, no, this, no, it's volume delta. We're fine. I can do it with the ES. ES space M6. Okay. So I've got everything linked together I've got them as 5-minute charts. Just takes a couple moments for this to load. It's a very memory aggressive program. Let's see. All right, so we're looking this morning at, was it 9:50? Is that right, guys? Just someone give me a 1 for yes, 2 for no. Was it the 9:50 candle we were talking about? Yes? Okay, thank you, Joseph. I know some others put the 1 in there also, but it was just the first one I saw. So let me pull this off to here. Let's really zoom in on it. So here's the 9:50 candle. So if we look, now if you look left, and I'll stretch it out, there's tracker on there, right? So that whipsaw candle there was good bid-ask volume, with the majority of it being on the ask side, so the buy side. So open here, stretch down, nice move up, decent volume on the lower one. So this could have become a bearish candle, but that decent volume drove it down to that level, to that bottom in there, which didn't we find that that one gave us a previous bottom somewhere? I just went back and looked. We had these bottoms here, right here and here. So very valuable to be able to tie these together and use both charts at one time. So that candle right there, that big green candle, is this candle right here. You can see inside the candle. So we had some volume driving it down, but look at what's on the bid and ask, and look at what was on the bid and ask up here as we got into our greens. There's no way that there was any importance whatsoever down here in comparison to these numbers here. 500 versus 2,000, 2,000. Yep, we had a 600 and a 200, but we were up to 2,000, 2,500 on the bid and 2,500 or 2,200 on the ask. So we had big numbers in comparison to the reds. A little bit bigger here, darker red too, but this indicator will help us look right inside. Debbie said, I didn't notice that support to the right and the wicks on the current candles. Perfect place to get out. I guess I need to be more aware. Thank you, always a learning experience. Right, and Debbie, it's a common phrase, and I would suggest the way that I started doing it was I put a sticky on my monitor. I've got stickies of anything that I'm trying to ingrain in my head, whether it's market or anything else, I have it on my monitor. So once I came out of the hospital, I had a sticky on my monitor that said 10/60. And basically what that was is to tell me you need to get up every 60 minutes for 10 minutes and stand or walk or move. And now I've got a 3/4 inch wooden dowel, 3 feet long, that I bring. It sits in my office behind my door. And not only do I chase the dog with it to play with her, I bang it on the, tap it on the floor at her, on the tile floor, which she loves to bark and chew at this thing. But I use it for doing, twists, and it just gets me up out of my chair and gets me moving. So put a sticky on your monitor that says look left, which is one that I had put on mine and had for years on my monitor. To just every time I'm getting ready to, or in the trade, my first instinct has to be go left, maximize the chart, go left, drag it out, see what I can find in there, snap it, and then determine good or bad. And this might not have been snapped right where it is. Guys, that actually, I would have had it right there. I would have caught that bottom, slight breakthrough there, and that bottom in there along with that top. So these two were a great opportunity if you saw that coming up on ES based on what was going on historically, right? So that would have been a great place to, and Debbie, even if it was, at that point we said a great place to get out, even if you got out of half of it, if you had 2 contracts and sold one of them, right? Even if you did that or some of your portion of your trade because that key level was there in case that catapult of a candle took place. Yeah, Debbie, for me, every hour is 10 minutes. 10 minutes of standing for every hour that you sit. So if you're sitting for an hour, you should be standing up for 10 minutes. Now, granted, the best way to do it is to not sit at all. Amelia typed in and said, I have to get up every hour and exercise my new knee. Totally understand, right? It is very important, very helpful, right? The more you can move, the more you can get up. But that 10 and 60 is a guide only. You know, if you listen to the experts, they tell you shouldn't sit down when you work at all. And I would have a movable desk if I didn't have 6 monitors. There's no way I'm raising 6 monitors up 1.5 feet, 2 foot off the desk and hope that it's stable enough. This thing is cranked down to the desk, and there's no way I'm going to take a chance that this thing teeter-totters and goes away. Okay, fantastic. So, yeah, Michael said check out the up desk. And is that the one, Michael, that sits on top of the desk and moves, or is it a full desk, or what is it? No, it's the full desk. Okay. My desk is custom built in this office. I think we paid $5 or $6 grand for the office furniture. The desk only. It's big. It is. There's a lot of footage on this desk. I mean, the one desk, one length of it is about 14 feet with the full, file drawers in it and everything. So had I done it then, maybe. So Joseph's asking, where do you get the up desk? So Michael, is there a place that you know that has that, or Michael did say it supports up to 300 pounds. Yeah, Google it. The shipping is free. Don't know about a brick and mortar store. Yeah, that's all, Joseph. I would say do the same thing. Just Google it. Rick says he's using lots of up desks at work nowadays. Oh yeah, I bet. For what you guys are doing, Rick, with the IT field, I know it's becoming more and more, do you want this at your desk instead of having to ask your boss, can I get it? They're asking you, would you like one? Just, it's less downtime, you're healthier, it just seems to be more of my sister-in-law works in a place that's standard for them. Every employee is asked, would you like this? All right, so let me go ahead and switch this back to a different template. And you guys tell me, Joseph had said he wanted to look at Costco. You guys tell me what you want to look at. Before we pull up Costco, Joseph, I'm going to grab SPX because on the S&P 500, right, we're only down about 1 point right now. We were down a little bit more than that, right, much earlier today. So we've had a nice increase from where we were, right? Wrong day. Sorry, my bad. I'm looking at a 15, not a 5. Let me go grab the 5. So, but we had been down much further than we are, right? If you look at 12 o'clock when we first logged in, we were a couple points down, right, at 2068. We're at 72. So we've gained about 4 points right now. So, Debbie, if we use the same thought process that I just went through with you on ES, I'm looking up here at, where would I want to have some concern, or where might I have some concern of resistance? And this area right here only helps me for the last day or two, but I want to go back further and see, is there something back there? Well, not here, but if I drag down right off there, look where we are right now. So yes, bullish. We broke above the moving average. We got a moving average cross up. The overall pattern had been bearish. So is that the same type of a potential head fake right there, or where we got on the ES, that whipsaw that took place today? So this is a tougher spot outside of a day trade for me, right? If you were looking at a position on this, and right now this is the spot, guys. What does it do at the moving average? Here we are, 12:30, and we're at lunchtime, so it's a lighter time anyway, but we're just resting, sitting, 4.5 minutes left in this candle, and I know that because on eSignal it's listed in the upper left. The question is, where does it go from here? So I'm going to go ahead, I'll resize this, we'll pull the SPX back up after. Let me go bring the daily chart up, and let's go look at Costco. Right, yep, so it was Costco Joseph asked for. All right, so let me back this up. And I already have a fib drawn on Costco, Joseph. So I'm going to just click on it, and let's pull this out here. And let's drop it off in there. Okay, so bias on it is definitely bullish. I'm above my highest moving average, right? I'd be looking at a potential bullish trade if it got back to the moving average. But here's the question you must ask yourself. If you let it pull back, and then remember this is a daily chart, if you let it pull back to this moving average and bounce right off of there, the moving average is, we'll call it 156. Well, at 157.5, there's a resistance already, the 236 on the fib, right in there, right? And would I take that trade in there? For me, the answer is no. I would pass on it. I'd let it settle out. I'd just go find something different. Does anybody notice anything else on this screen right here that might be concerning to you? And I'm not going to go any further back. I'm not going to let you look at anything else because I've got a very specific idea in mind, something that, and when I say concerning, just something's going on, and you should, yes, Rick, you got it right. What do you mean, Dr. Tom? So yes, you guys are right that there is a bearish engulfing, not quite what I was looking for. Not quite what I was looking for, but so here's what it is. Here's what I'm looking at. Guys, look at the move. Look at the move up here, right? Look at how strong that was, that breakout of the tops right in here. Once again, the theorem of look left. Look what we broke out of, right? On that breakout candle, volume was down below the average. That's number one. Number two, look at Wilder's average true range, where we were trading at $3.50 on average per day from high to low. We're now trading around $2.50. Right? There is a congestion, Patty, happening at that hesitation point. 236 is hesitation, so good call on that one. Two things I'm looking at are just some of the lighter volumes and the Wilder's average true range dropping off a little bit. So a little concerning from that standpoint of, you know, how much do I like this one? So for me, Joseph, primarily because of the pinch between the 8 and the 236, I'm going to let it settle out and then see what it does later. Now, with that being said, Joseph, I am more than happy to day trade this position. Weekly option, get in, get out today, right? I have zero problems doing that, right? I think day trades are phenomenal opportunity. I think you miss a lot in the market if you're not day trading. And let's see. So I'll show you guys. Let's see, I don't want to open them all up. But, so Priceline was a day trade that netted us $22,000 on the 31st. Valero was not a day trade. We got stopped out of it, though, of $2,000. Amgen was a day trade we just did on Friday. And again, these are all non-funded trades. And it netted us $32.50. All right, so day trades have a great potential. And don't get me wrong, so do the trades that are, you know, we're in our full monthly positions where we're anticipating a 2 or 3 week time period to be there. Here on Facebook, we're talking about from the 11th to the 31st, netted us $4,000, $41.75. So really not too bad numbers-wise. So Joseph said, thank you, I had the fibs drawn differently, I'm still learning. No problem, Joseph, piece of cake. That's why we do this. That's exactly why I'm doing this on a Monday afternoon. I was invited to hang out with my daughter today because she's done with her test, or done studying for her test. She wanted me to go to lunch with her, and I had to put her off a little bit because I'm hanging out with you guys instead. Let's see. So Brenda's asking for Panera and LinkedIn. You're very welcome, Patty. So LinkedIn, right? A little bit concerning with the overall pattern, and I don't really mean it in an extremely negative way, but it just hasn't done much since the earnings announcement. So we had a trade on LinkedIn. We had a trade on LinkedIn that, you know, I had, when I was just showing you guys those trades. Let's see if I can find it. We might still be in it. Let me just see. Nope, we're not in it. We closed it out. Oh, there we go. Okay. So we got in LinkedIn. We only did 4 contracts, and we got in at 115. We got out of 2 contracts at 111.5. We got out of 2 contracts at 113. So we made a little bit of money. We're up $700 on the trade. It wasn't a killer trade, but we made a little bit of money on it. But it's yellow because it's aggressive. So we actually got stopped out. We got stopped out with some of this whipsaw in here. So let's see, Brenda, I would be a little bit cautious. We've got this one considered on LinkedIn right now as a bearish neutral, but we just called it a day trade. We're willing to get in and out quickly intraday, but other than that, with this gap down, we've been in the standard earnings, I don't know what I want to be when I grow up mode, where we're just kind of stuck there. And then you had Panera. All right, so guys, I have no fibs drawn on here, so I'm going to go and do a pullback, and I'm going to look at what the picture looks like, right? I've got a nice bearish move here, good thrusty move. I've got a similar size bullish move here. I've got this move with that hiccup in there, and then this move back up, or I have this bullish move in here. Right? And that is the most recent run closest to the right side of the chart. So I know some would say, well, why don't we draw off of here, because we've got a new V-top in there. And if we do draw off of here, we're going to end off of these tops, and I'm going to just stretch it out to the right. Look what we pulled down to, guys. That was the catalyst right off of the 618. We gap quick down to the 764, and we run. And that was our brand new move from that point. So we're going to draw from this low to the high of the wick of this red body. Okay. So one more time, I'm going to just stretch it out. Okay. So we look at Panera. All right, so Brenda, as we look at this one, we're bullish, we're above the moving average, but you've got to ask the same question. If moving average is 208.5, 208.40, 211.5, well, now I've got $3. If I can come down and tag that moving average and get a bounce, or close near it and bounce the next day, I'm more inclined to take that trade there, because I've got a decent amount of room to move and hit that first resistance before I've got to be concerned of, do I want to be in this trade any longer or not? All right. So if we get the bullish move from here, guys, we're looking at 220.5 and 230.75 are the upside targets, which I am very pleased with. All right. Let's see. Diana was asking for TMO. Oh. Let's see. So Thermo Fisher Scientific thingy, not sure who they are. Don't trade them. But nice move up, sideways move there, nice move up, and a V-top where we finally formed out over there. So we could draw our fibs right from this bottom, right here, up to this top, right in here. Right? So I love the move. I really am excited about the confluence of the moving average in that 141.58 level. So what I would like to see right now happen on this one, Diana, is I would love to see a reversal, even intraday, down to that 141.5 and a bounce, and then that 147.5 would be a great target for me. This is a zero-line breakout trade is what it's called. We actually scale out of half the trade in the center of the two fib lines, which ironically is about there. It's pretty darn close to where we are right now. When you say do Fibbits work here, Amelia, meaning do they apply or can we make them work on e-signal? If you're asking do they apply, the answer is yes. So the zero line breakout trade, once you break from the zero line, if you take the breakout or if you wait for a retracement, either way it doesn't matter. Okay. If you take the breakout or a retest, we scale out of half the trade at the midpoint. So if we want to be exact, let's go ahead and let's go put in a negative, we may already have it on this one, but let's go put in a negative 136. Oh, we don't. Okay. Negative 0.136. All right, so there's the line. And you can see it's right about where I drew my line. Okay, good, Dan. I'm glad you drew the fib from that same point, and there's a fibit on a zero-line breakout trade. We scale out of half the trade at the fibit, the other half at the next level. Scott says it's almost like I know what I'm doing. Yeah, I mean, I get lucky. You know, I get all you feed me stocks that I ask you to send me, right? Michael said, would you be concerned about a lot of gapping on this stock? Your grandmother's teeth comment. Yes, Michael, that does bother me a little bit. This is Thermo Fisher Scientific. They're on the NYSE. I don't know who they are or what they do. Life sciences. Oh, all right. Here we go. Pharma, biotech. That may be part of it. So we had more of that gapping going on here, Michael, right, in these areas. A little bit less of it here. I don't know what's changed. But, yes, definitely when you see those types of gaps, you've got to be concerned about where the position's going. Absolutely. So Debbie had said, how come the SPX looks too bullish? Let me redo this here, Debbie. So help me understand what you meant where you say it looks too bullish. I mean, from this pattern, the SPX itself is. It definitely is. If we go back and look at the ES and we go look at daily, oh, on an intraday. Okay. All right. So let's go back to the intraday then. So this is our daily. Let's go to the 5. I try not, guys, once I modify my templates and define this one as the 5-minute, this is the daily, I really don't like changing them. I don't like it at all. And actually, I learned a really cool trick this week at the 2-day traders camp from Michael Cook, that if you come up into the header and you right-click on the word, right-click or, nope, now let's see, it's going to make a liar of me. Right-click on the word, you can click rename, and you can call this, instead of it just saying chart, I can make it 5-minute. Right? And then it changes that to 5 minutes. So anytime I'm looking at it, I don't have to wonder what was this supposed to be. I know that's the 5-minute chart. I can do that to daily and so forth. So guys, that's that's some of the benefits of coming to the 2-day traders camp. And I know Rick was just there for his first one. He's already signed up for his next one. Okay, so Debbie's saying, all right, I understand. So Debbie was saying that it looked bullish on the intraday chart of the SPX, where the intraday chart of the ES did not. And that is because what happens, Debbie, we had a nice overall bullish pattern, but remember, there's no overnight session, so you don't see any of that. You got the gap down, that quick move on the open. This encompassed, that first 5-minute candle encompassed the whole move overnight, realistically, on the ES. So they are slightly different positions, and having that overnight session there can skew it a little bit as well. Okay, so let's put that back. Let's see. I just want to make sure I'm not missing. Rick says, oh yeah, I love Traders Can. And the funny thing was, for Rick, you and others in there, I said my goal was to just cut 20 seconds off of your trade. That's what I gave as a goal. And everybody's like, oh, that'd be awesome if we could just do 20 seconds faster with some of the tips that you learned, Rick, from what I taught and what Michael taught. And do you think you reaching over out as well as some of the others and helping other people there, do you think you were able to accomplish that goal, that we can cut that time off of your entry or exit just by what you learned there? Absolutely, Rick said. There you go, guys. All right, so Sandra was asking about Apple. Let's go look at Apple. So Sandra, the question from Sandra was, where are your fibs on Apple? So right now, Sandra, we're looking at Apple as a bullish bias. We got a good gap and go today on Apple. I have an open trade on Apple right now, which may prove to be very beneficial. Let me just see. Wrong sheet. Yep, so I have an open trade on Apple. I'm already out at 110. No, so I'm already out. I already took my first exit 2 days ago. So we're looking at that 115-ish level, 114.35. Let's see. Yeah, 114 is what we have on our tracking sheet. So this next level is where we're looking for our next out on Apple for our non-funded trade. Right, guys, remember, we're already in this trade. We have been in this trade now since the 29th. So to say, oh, I'm in today, you're a little bit late to the party for my style of trading. I think you're taking on a little more risk, because if you get in at that 111.71, you're not getting out until you get down below that 108.67 level. So, and actually 108.15, so maybe 107 is where you're getting out versus 112, we'll call it. You got a $5 risk profile in this trade, a little bit more than I can deal with, 5% on this $100 stock. Not really my my cup of tea at all. So Sandra, I'd like to see a pullback to the moving average and a bounce before we take the entry into this trade again. Once again, I'm already in, so we're good. And of course, it's not funded. All right, Facebook. We already have our fibs drawn on Facebook. I'm just going to drag them outward. All right, let's try that one more time. Okay, so violated, Facebook, no open trade on Facebook. We were looking for a pullback to the moving average. We closed here, we opened here, and have continued down. So if this stays down here, I'd want to see it get back above that 114.5 level for an entry, and then I'd be looking at 117.75. I probably need a fib it on here, 250, $5, 118. Yeah, I would need a fib it. So we would apply the 136, the negative 136. In there, so we would scale out of half the trade at that 121.5 and the other at the 125.5. Let's see. So Joseph said, may we look at the YM? Where do you see it going today? I don't have to look at it, Joseph. I'll guarantee you where it's going today. It's going up, down, or sideways. But we'll pull it up just to confirm that. Yep, it's going up, down, or sideways for sure. So on the intraday chart, Joseph, here's the thing. The biggest question I've got to ask myself is, if the overall pattern is bearish today, do I really want to fight the overall pattern, right? That overall trend. That, to me, is kind of the, right now, let's do this, all right? We're down 17 points, 16 points on the YM right now, which is not huge, Let me bring it in. But remember, we're down 16 points from the close. Where were we? We were up as high at, oh, I got the wrong chart again. Let's do that one more time. Okay. So we were, the close at about 17.7, and we pushed up to 17.750, and now we're at 689. So we're about 60 points lower. Thanks, Joseph. I appreciate you catching that. I just looked left and caught the symbol. So I would be a little more cautious. The overall pattern has been bearish, and it's been bearish with a breakout. So Debbie, this is where the recognition of that pattern this morning on ES, and for all of you, but on that recognition of that breakout there and that choppiness, we broke out again. We had not, now this one we didn't get a moving average cross setting up in there, right? And we're getting those lower tops in there, but we did have a moving average cross on this one right here. So that's the one thing that did change a little bit here is that crossover. But on these moving averages, we're in that same, what Scott called yuck before when we were looking at ES of here. It's no different on what we're looking at here. It's just kind of in that, yeah, Scott says the technical term. Exactly, Scott. That's exactly what that is. Oh, that's right, Rick. It's, you know what it is? This is a 5-minute chart. It's not the daily. It's right here on our daily chart. And Rick says, and we need to add that 17,711 number in there. Good catch. Those of you that are in the E-mini with us, this 17,711 is something that Rick, had found these major fib lines, in the 17,000 range. And it proves to be an extremely powerful level. So putting it on the intraday on the 5-minute is not a bad thing either. So there was another, now Debbie, if we saw this breakdown here on YM, pull back up and we're at that 17,711, and the question is, are we going to fail here or not? That 711 is a powerful line of, yes, we failed, and with a vengeance. That, right there, break down, come back and retest, that could have been your next entry, 695 down to 640-ish. Right, Debbie said another sticky note to add to 17,711. And Debbie, if you, I don't remember if you were in class when we did that, when Rick had first found that, and I went through and did an analysis, but either Rick or Debbie, if you guys remind me tonight in the Trader Talk, we probably should revisit that tonight, just because of what's going on in the market. We should be looking here and SPX to look at those major fib lines, and we'll talk about, what the potential ramifications are here. And guys, if you're interested in getting into the E-minis with us, I will tell you that, everybody that's in there will tell you that if they're trading options and they're trading the E-mini futures, they are becoming better options traders because it's teaching patience. And if you're leery about it, is this really for me? Come in for one night. You can go ahead and just get one night. Call Amelia or her team up, and they'll be more than happy to help you guys. You can register for one class if you'd like, right? If you didn't want to go into a whole quarter of it. Cool. All right. So with that, ladies and gentlemen, we're done. You guys are awesome. Great group of questions today. Good stocks to look at. Did you guys enjoy it? Was it helpful? Pick up some new stuff? Fantastic. Remember, I'm not asking you to type much. 1 for yes, 2 for no. Yeah, I'm not going to be able to capture it, Rick. Maybe you could just shoot it to me tonight. We can talk about this tonight, actually, Rick. I don't think it's a bad thing. Talk about trading systems and what to look at. Cool. All right, Liam, thank you very much. You guys have a wonderful day. God bless. And I will see you tonight, hopefully, in the E-mini Trader Talk. Take care now, folks. Bye.